Can we say that we will have no pension?
You need to
Right.
invest, period. The government is pushing to buy more debt. Go to a bank and you ask for a financial advisory. The consultant works only for the bank. The financial education in Italy is not very high.
Welcome to a new episode of Human Finance brought to you by Bondfish, #1 bond market platform for investors. Today I'm joined by Alessandro Ciccolo, independent financial consultant from Italy, part of Finanza Semplice SCF, and a long-term investor in both bonds and equities. Alessandro advises a wide range of clients, including high net worth individuals, and brings a clear, independent perspective on personal finance. In our conversation, we explore how Italians invest and why bonds play such a central role in their portfolios. We discuss whether financial education in Italy is really lower than in the rest of Europe, and how difficult it is to find a truly independent advisor in a market dominated by high-cost products. We also talk about pensions and what our generation should realistically expect, along with practical strategies to prepare for retirement. And then we dive into what makes Italy interesting for foreign investors, from government bonds to Italian equities. Let's dive in. Hi, Alessandro. How are you?
Hi, Anatoly. I'm fine, thanks.
Thank you very much, Alessandro, for joining us. Today we have Alessandro Ciccolo, joining us from Genoa. And in today's episode of Human Finance Podcast, we will talk about a bunch of interesting topics that, in my opinion, are quite, interesting to many investors living in Europe and beyond. And we will first of all talk about Italy, the patterns of investment that Italian investors have. And then I will talk about also the future of pension system in Europe and in particular in Italy. What is it of difficult or interesting what you expect in Italian investors in 30, 40 years, and especially young professionals that are going to retire, hopefully to retire. We will talk about hopefully to retire, especially about this term in this episode, and we will also touch the topics of bond and stock investment strategies and what financial advisors and financial consultants in Italy, the type of people that actually Alessandro is. He is a financial consultant and financial advisor, what these kind of people do in Italy and how they work. Thank you very much for joining me. It is a pleasure to see you.
Thank you for inviting me. It's a pleasure to be here.
Thank you. Let's start with the first question I have. It actually concerns the habits that Italian investors have. What is the preferred pattern of investing in Italy, and how Italian investors are different from other kinds of investors in Europe or maybe oltreoceano, like across the ocean in US, in Canada? What makes them different?
So, how do Italians invest? Basically, if I had to summarize the average Italian investment process, it's like Italians save a lot. We are very good savers, but they still invest in a very conservative way, so mainly bonds, and sometimes also in inefficient ways. So basically, we have huge share of Italian savings stays in cash or or deposits, according to the FPA. So 45% of Italians leave their cash in their account. Other, considering the pool of this research has taken into account, only 19% of Italians invest in mutual funds, shares, or ETFs. So there is a tendency towards more conservative investment strategies, also because financial education in Italy is not very high, let's say.
Thank you very much, Alessandro. That's a very curious topic, because I always say that talking to different financial influencers, bloggers, let's call them this way, from different European countries, everybody seems to lament and be a bit skeptical about financial education of their nation, of their country. For example, I often hear from the British people saying that, okay, the financial education of British investors leaves much to be desired. Then the French say the same, the Spanish say the same, and it's kind of different, very interesting to compare these different countries. I found some figures saying that if we compare, for example, Italy to some other European countries, for example, OECD, INFE, Adult Financial Literacy Survey, like Italy scores 11.1 out of 21 versus an OECD average around 13. I mean, I found this figure quite kind of interesting because I never knew that, one more time, according to the statistics, international statistics, this level of financial education is measured as low. But that's interesting why it is, but we will like get to it. And I wanted to ask you maybe a question which of the topic that we both are working with before, about the bond investment. And where does the Italian passion for bonds come from? Because we all know that Italian investors love bonds. Italy is considered one of the bond lagoons in Europe, and Italian investors are known for their passion for especially local bonds, local bank and governmental bonds, BTP, OAT, BOT, issued by the Italian state. That's very interesting to know, your take on it.
Yeah, so basically our love affair with bonds comes from a cultural reason. Basically, the average Italian has a low financial literacy, so he's investing in real estate and in government bonds, as the most the safest thing to do when he has some money in his savings account. BTP is seen as a safe asset, and the quota of investments in government bonds is always increasing. So given this situation, the government is always, of course, people in the government know that, so they've been issuing a lot of new government bonds recently. It's a thing that governments always do, but knowing this habit of Italians, they've been doing that at a much, let's say, higher rate.
That's so comparing Italy to other countries. For example, here in Germany, where I live, there is no intention, no motivation for German investors to invest in governmental bonds, because actually you pay the same capital gain tax on bonds and stocks on ETFs once you withdraw your money and once you get that capital gain. But in Italy, it's a different story when you pay just 12.5%. You can correct me if I'm wrong. If you buy actual governmental bonds,
there is a tax advantage that also brings people towards investing in government bonds. Also, this is a huge hook for people.
So the government knows this passion of people and tries to benefit as much as possible, trying to incentivize people to buy as many governmental bonds as possible, because Italy is known as having a very high public debt, around 3 trillion euros, something like 140%, approximately, of GDP. One of the highest in Europe, but at the same time, makes peculiar, why Italy stands out in comparison with other countries in Europe, is that actually majority of this debt is in the hands of Italian investors, right?
This is correct, and the government is pushing for more retail investors to buy more debt. That's because they have this idea that if the debt is in the hands of Italians, it's better, and also if that percentage increases, also a better situation in case of crisis, in a way.
I see. Coming the topic, of since we discussed that Italian investors are in love with bonds, and they're quite, famous for it, like many people in Europe, they already know it. And, Italy is not maybe like the only one country in Europe, but it's, surely one of the most ardent countries when it comes to, investing in governmental bonds, especially governmental bonds. It's really interesting after analyzing the information we discussed earlier about that people are unsatisfied with the financial literacy in Europe, in Italy, and they consider it to be quite low. At the same time, people are buying governmental bonds. At the same time, the government is incentivizing them to buy them. And at the same time, it's interesting what actually brings Italian investors to do it. What are the factors that educate them? And what is the role of financial advisory in this equation? How easy is it in Italy to find a truly independent financial advisors? Because we actually, in Germany, and I think that in Italy, it is the same story, that the majority of financial advisors present on the market, tens of thousands of people, even maybe hundreds of thousands of people, they advise, make people buy some financial products, but they do so gain some interest for these kind of things. So they I wouldn't say compromised, but there is a correlation between, working for some bank or some association, just pushing these kind of products and financial instruments issued by this organization. When I say independent financial advisor, consultant, I, of course, maybe you too, first of all, we have an idea of people not getting money, not getting commission for these kind of products. They just truly advise something which is a good idea to buy, which is a good idea to have in the portfolio. So how easy is it in Italy to find a truly independent financial advisor?
So most of people invest through a bank in Italy, and according to the Italian law, if you go to a bank and you ask for a financial advisory, the consultant works only for the bank. So the consultant will talk about products, basically mutual funds, active funds, that of course have commissions. And a part of the commission charged by the issuer of the fund will go to the bank and to the consultant. So this is like the main way of investing in Italy. Then, like 25 years ago, fee-only advisory and fee-only advisors started to develop in Italy. But it wasn't until 2018 that the government Ministry of Finance created the National Register for Financial Advisor, which is basically divided in two parts. One is advisors working for banks, and the other are fee-only advisors like me, which don't have this, in Italy at least, conflict of interest between them and the clients. So what I do is basically I charge the client a flat fee for the year, and then I only make his interest while advising the financial products. So it's like a totally different approach to financial advisory. I do the best for the clients because I don't need to sell some kind of financial product, basically. I am paid by the client, and that is the most important difference in Italy right now. And the sector, the fee-only advisory in Italy is booming, literally. And people are more aware of the fact that the advisory from the bank has some hidden details that, of course, they pay.
That's interesting. So, but how many people are considered to be independent advisor? Like a ballpark figure in Italy? Do you have this data?
So I think advisors working for banks are around 5,000. While fee-only advisors like me, we reached 1,000 a few months ago. So Yeah, there is a lot of difference, but the fee-only advisors are growing year after year. So I think the let's say the panorama, the scenario is shifting in Italy slowly, but it's shifting.
Hopefully, yeah. I really, it's interesting because, in my opinion, from what I analyzed from the work of financial advisors here in Germany, for example, and I believe that it is also a case for many countries in Europe, that we talked about financial education.
Yeah.
But they do not actually, they are a big number, whatever big, it could be maybe 1,000, even 10,000 people. They do not breach that gap of financial education by pushing the products for their commission, for the bank commission, etc. So they just sometimes, I wouldn't say fooling around people. I would say that one should be very conscious while having an advisory session with these kind of people.
Yeah, you're right. And financial education is a big part of my work with each client. Of course, depending on the level of financial literacy of the single person. But for me, it's important to give tools to the people to understand what we are doing together, where we are putting their money, and most of all, at the end of the financial consultancy or at the end of the year, if the client tells me, okay, this year we invested, you taught me some things, now I think I'm ready to go on my own, that means that I did a good job.
Okay, perfect. Moving to a different topic, I'm looking forward to discussing with you the topic of pensions and what is going to be and what is expecting this system maybe in 30, 40 years.
Yeah.
Because, for example, the platform Bondfish, we see that the median age of the people registering on the platform is about 37.
Yeah.
So, and if we presume that the majority of them are retail investors, so we're talking about young professionals trying to save their money for their pensions, trying maybe to become part of the FIRE movement, maybe to retire in 50s, hopefully, maybe even earlier. I don't know. It depends on the person. It depends on the financial goals and what is the exact sum of money that the person needs for them in their life. But it's interesting because I was one of the listeners to your webinar, one of the guests one of the first webinars you developed for your clients and prospects. And you were talking a lot about the pension system in Italy. You were talking a lot about it to be unsustainable not only you, but you were providing different figures from the financial press, from the financial advisors and speakers in Italy and Europe in general, and that's kind of intuitive because Italy faces the same problems that most of European countries have.
Exactly.
We all have these problems. We all have the problems of shrinking labor force and people working, and this ratio of working people and people being on the pension that is dwindling, and we will have more and more people being on pension and less people working. At the same time, everybody knows that it's a very, very complicated topic. When politicians speak about it, when politicians try to, raise the retirement age, it brings political crisis, as in France we observe it for the last years. And also, it's a very unpopular topic. Once you started negotiating, having this kind of debate, you lose a few percentage in the pools, and we just like shoot in one slag, for the politicians. But still, it's a very, very interesting topic because I'm very curious what is going to be in Europe in 20, 30, 40 years, considering that we still have the same kind of like economy. Of course, it will change. AI, new technologies, etc. Maybe we'll have less jobs. Maybe we will have more jobs, nobody knows. But what is going to happen with the pensions of the people who are in their 30s and 20s and just paying their pension, and paying their taxes every single month? Considering all these problems, declining working population, rising retirement age, the sustainability issues of current pension system, what strategy should we follow to prepare for the retirement, in your opinion?
You said correctly that we have big structural problems in our pension systems across Europe. Some countries like Italy, given the way in which the pension system is structured by the laws and the government, we have a problem of sustainability because we have the oldest population in Europe that of course is shrinking at very high pace. Also, we have a demographic decline because fewer and fewer babies are born every year. So according to the Italian current situation, the people working now are paying for the pensions of the people now that are receiving it. So given this demographic decline, when I will be around 60 or 70, if the demographic decline is not reversed in some way, nobody will be there to pay my pension, basically. So what people in their 30s, more or less, must do is save as much as they can and invest as much as they can. Because if somebody is from a country which has a similar situation in Italy, the fate is already written. So people need to invest because their national pension funds can't basically pay for their pensions in the future. The pension budget is always increasing for any country that has a average high age for the population. So this, of course, brings the problem of sustainability. Because if the pension budget, the state pension budget is always higher and increasing, there are maybe, at least in Italy, less people paying taxes and less people born. Of course, something will happen in the future. And probably it's not going to be good for the ones that right now are in their 30s like me. So people need to increase their financial literacy and start investing as soon as possible.
That's very interesting. Thank you very much for your take. Because actually, as far as I understand, the governments will not have quite great options on their hands, in 30 years. Either they raise retirement age, or either they just cut pensions.
Exactly.
Or just raise taxes and pension, the part of the salary that is destined to the pension fund. So the people who already work in their 20s, 30s, 40s. That's interesting. I'm curious to know whether, in your opinion, Italian investors, Italian people, Italian professionals, not investors, but professionals, and professionals from other countries close to Italy, with the same situation, demographic situation, with same trends. We have quite a few countries in Europe that follow the same pattern. Whether they will have pension at all, and what is going to be in 30 years. So how
I don't think that there will be no pensions at all, luckily, hopefully and luckily, but I think that the average pension will be much lower than today, much lower. That's why we need to invest, because if the average pension keeps decreasing, or it keeps being decreased through the years, if you have your investments, you can compensate the difference between your pension and your needs for daily life, basically for the style of kind of life that you want to have, which, as you said, everybody is different, so everybody has different financial needs. But if you invest, you can compensate and you can live basically the life that you want when you retire. If you don't do that, you will have to use the public pension only, or mainly the public pension, which will be much lower.
Okay. So there is no other option than to invest?
According to me, in my opinion, no. You need to invest, period.
It's quite clear, yeah. Thank you. Okay, about the financial instruments and the products that people should invest. In your opinion, what is an ideal investment portfolio that you would advise to a person in 30s? I mean, you actually cannot go into details because it depends on the financial goals of the person. I mean, it's okay. But in your opinion, if you just make a medium, I mean, the picture of a medium professional in their 30s, for example, or in their 20s, starting their career, what is the ballpark figures that you have for different financial assets and asset allocation of this person?
So, of course, depends on the risk tolerance, because even though you are young, it's not written in stone that you can tolerate the markets like swings, because sometimes can be hard to tolerate, psychologically speaking. I would like say 50% at least stocks, equities, and like 40% bonds. And when I'm talking about bonds, I'm not talking about government bonds only, but there are also, of course, other kind of bonds that one can use and insert, put in the portfolio. And then like the remaining like commodities, especially like gold, silver, those that like low the correlation with the other assets, basically.
Right. I will just add from my perspective that our listeners could find, I believe that all those bonds that they need on the platform Bondfish, they could just go to the link and just find this kind of, not only governmental, but corporate European and not only European bonds from all over the world. That's interesting that you mentioned stock portfolio, at least 50%, then bonds, and then like other assets, but you didn't mention bank certificates.
No.
Quite popular investment product now in Italy. Not only in Italy, but Italy happens to be one of the countries in Europe that loves this kind of product. We talked about, earlier we said that Italian investors are in love with bonds, but also it turns out from the figures that from the numbers that Italian investors are quite prone to buy this kind of financial bank certificate, especially issued by Italian banks. And that's interesting for some investors from some other European countries, for example, from North Europe, where it's not that popular. Maybe you could just like briefly explain us what kind of and why it became so popular in Italy compared to some other countries.
So certificates are like, imagine like a package with inside some options. Options are derivatives, basically. So certificates are like combination of different options on specific like underlying assets, which could be like a bond or stock or an index. And there has been like an amazing work from like the biggest Italian banks like Unicredit, Intesa Sanpaolo to like push this, to create and to issue these financial instruments and to push them, of course, like with webinars and with like events all around the country. They offer, especially for Italians, they offer like some perks that Italian investors seem to love, like 3 months dividends, extra bonuses if you buy them at issuance, and also they help with tax efficiency here in Italy, at least. So that's what makes them like very, very interesting for the Italian investors. The problem is that sometimes they could not be like the right choice for a specific client. It happened to me like recently to find a certificate in a person's portfolio, but the person didn't know about this certificate, didn't know what was the underlying asset, and basically bought the certificate because the bank financial advisor suggested them to buy it, but he didn't know like anything about it. So that's the problem, of course, of financial literacy, but also about risk. Because if this certificate is like on an index of stock index, but the person is risk averse, that could be a problem because certificates have very specific and complicated terms and conditions. And if you don't know how to read them and how to understand how the certificate is working, it's a problem. Because if you need the money for some reason and maybe the certificates have some conditions that are not, let's say, good for you, then you need to sell it at loss. And maybe you can also lose like most of your investment. So they are like risky instruments.
That's interesting. Yeah, I never understood this kind of passion. We all know since, when we both work together, I used to analyze the content created on YouTube in Italy by financial advisors, by banks, by different institutions, by, different financial bloggers. And I was surprised. I was always surprised. Why are so many webinars on bank certificates? They're pushed and pushed like every single week. There is a webinar, or there is like you can't practically find a single Italian blogger, financial influencer, not mentioning somehow or even like organizing a special event about this kind of financial product. And that's interesting because from the countries where I lived, I never heard about it, about these bank byproducts. Yeah. But interesting. Let's turn to the topic of attractiveness of Italy as a country for foreign investors. We talked about some problems that Italy has, and not only Italy, but some European countries have. I mean, of course, it's a shrinking working population. It's the very complex situation when it comes to demographics and very low birth rates, and I would say steady decline for many years, for many decades. At the same time, Italy is quite known all over the world, even in the States and Canada, as the country which is superb in different fields and different spheres. It's a very attractive tourist destination. It's a country that still boasts very attractive car brands, some kind of manufacturing figure heroes, even on international scale. And also the bank institutions that we also already mentioned, Unicredit, etc., they are quite well known all over Europe, at least all over Europe. It's interesting how you describe and how you would suggest to foreign investors to invest in Italy, or maybe to have or not to have in their financial portfolio when it comes to geographic diversification. What is your opinion about Italy? Should it be in the list of the countries that foreign investors should invest? How much of share would it take? And what are the assets and financial instruments that they should first of all look at?
I think that Italy and Italian bonds could be useful to have a better diversification. The good thing is that our rating, according to rating companies like Moody's and Fitch, has recently increased. So that helps, of course, the government that is constantly issuing new bonds, which is good. I mean, it's good if the country's rating increases, which basically says that is more trustful towards foreign investors. So our debt right now could be an option, but I wouldn't of course, go all in on Italian debt. I would take a small percentage, like 5% maximum of the portfolio, of the bond part, of course, of the portfolio. And also Italian equities, our index, FTSE MIB, has been performing good lately. But as I always say, you need to look at the bigger picture to see how an index is really performing. And I have to say that our current level of our equity index is good. It has risen a lot in the last years, but it took 18 years to reach this current level after the 2008 financial crisis. So it's not gold all that shines, basically. Also, it's an equity index that is highly concentrated on the financial sector, accounting for 48%, nearly half of it. It's financials, basically. Again, could be a small part of the stocks portfolio, but I would not go above, again, 5-10%.
Mm-hmm. You mentioned about 17 years. I also saw this figure these days, but we're talking about index. So if we take into account the dividends paid by the companies, of course, it took a bit less, I believe, than 17 years. That's interesting to know about your personal suggestion. We can advise to some, for foreign investors to invest in Italy and just allocate maybe 5% at most, as you said. of their portfolio. But do you personally hold some kind of Italian financial instruments? Do you have any exposure to Italian market? I know it's personal. I wouldn't ask you anything like more, but still, yeah.
I have some exposure to Italian bonds, but I don't have exposure to Italian stocks, personally speaking. That's because if you look at the capitalization of our national index, it's very small. So, according to my opinion, I mean, I go where performance is, and we all know that basically it's the US, it's not Italy. I mean, the index is growing, yeah, okay, but the real performance is made overseas in America. I own bonds, but I don't own Italian stocks. It's too little. I mean, the market is too little, literally.
And it's not that diverse.
No, exactly.
Yeah. Okay. Let's switch to some personal advice topic, if you like, because it's really interesting to ask you a few questions about it. We know each other for some time. I know how passionate you are about financial planning, about finance and personal finance, like about finance in general, but especially personal finance, and how to advise people, to invest in different financial instruments, and how, to build their strategy, craft their strategy for different kinds of people. I'm very curious to know, because I know that you read a lot of books in your life about investing. That's part of your profession, that you, on a daily basis, read a lot of articles, reviews from which you gain a lot of information that you process and then you elaborate on. What are the 3 books for our resources you would recommend to understand investing to our listeners?
So I would recommend, like, the first one, it's The Psychology of Money, being like really interesting and can teach a lot about like the way in which one should think about the personal finance own situation, but also investing in general. Yeah. Then, like, another book that I would suggest, it's The Behavioral Investor by Daniel Crosby, which is another very interesting book because it takes, of course, psychology and finance. Behavioral finance, to me, is really interesting because when we buy or sell stocks or bonds, whatever, on the markets, there is always a psychological aspect, a psychological like part of it. So you can't like separate the two things, because we are moved by emotions, especially when there is money involved. So, like, also behavioral finance, there are many books about it, but I suggest, if of course one is interested, to look at this book. And then another one could be Intelligence Trap by David Robson, which is like more about psychology, but you can also apply what you read in this book to your financial life, basically starting with your savings, going to like investing.
Thank you very much for this kind of conversation. I really enjoyed it. I will write everything that you advised.
Thank you for having me here.
I would like to also say that for our listeners, one could find the special document that Alessandro prepared for our listeners for this podcast. It's a short selection of corporate and governmental bonds issued by Italian state and Italian companies. So everybody could find it in the video description of this video. Thank you very much. I really appreciate your help and appreciate your story.
Thank you. It was a pleasure being here with you and discussing all these topics. And if you need me, you know where to find me.
Yeah, physically in Genoa, but digitally, of course, you will give the link to your profile. I believe that you have your own like Instagram page.
Yeah, also LinkedIn. Yeah.
And LinkedIn, yeah. Perfect. Thank you very much and have a great one. It was a pleasure to talk to you.
Thank you. Thank you. Bye.